Hey, Cash Flow Tactics fans. It's Jimmy and Ryan back going through the mind map. We will get this done eventually. The good news is once we actually get to the content, Ryan, I think it's pretty valuable information.
You got it. And Jimmy, last week we got to hang out together, right? So you were out here in Utah, and we got to have some fun up in the mountains of Park City. But one of the key speakers at the conference that we were at was Tom Wheelwright's. And I don't know about you, but that fired me up. It got me reinvigorated and excited about the topic of taxes. So Jimmy, why would anyone be excited about the topic of taxes?
Learn how to not pay them.
Got it. That's the best way to say it, right? And that's exactly what Tom Wheelwright showed us. So we're going to record 2 webinars on this. And what we're going to show you is we're going to show you what we call the art and science of collapsing time. Jimmy, have you ever seen the movie Interstellar?
I do. I know a lot of people hated it, but I kind of liked it a lot.
I can't get over the one theory in Interstellar. I think about it all the time, and he talks about the collapsing time, right? These 2 scientists and astronauts, they go to a wormhole, and right now, as individuals, we think of time as linear, right? Where are we today, and where are we tomorrow? 24 hours from today, it's going to be this time tomorrow, and so on and so forth, and there's nothing we can do to change that. But in Interstellar, what they talk about is they talk about the fact that you can actually change time simply by bending time, right? And he talked about that's what a wormhole does. It takes the same straight line and it just bends it. And now you're able to pierce through time going through it at a higher dimension.
Right.
So what does this have to do with finance, Jimmy? Well, I mean, why do we talk about bending time in finance?
Because if you can make money in multiple different streams, you can reach financial freedom much faster.
You got it. And that's really what it's all about. So we're going to do a case study. We're going to talk about it practically here. And then on the next video, we're actually going to prove this out. Now, if you guys want a copy of all of this stuff that we're talking about, text cash flow to 797979. So cash flow to 797979. But let's just talk about a concept that we call the 4 pillars of wealth creation. Okay. In investing, there are basically 4 ways that you can potentially make money in investing. Right? You can make money through appreciation. You can make money through cash flow. You can make money through what Tom Wheelwright talked about at this conference, through using the tax code to your advantage, through legitimate tax deductions, not 401k tax deferrals, but tax deductions. And you can make money through leverage. Okay, so let's keep this idea of bending time in mind, and let's just do a quick case study. Right? Jimmy, you talk to people all the time. Would you say the majority of the people that you talk to, are they real estate investors themselves?
When they work with me, they're becoming investors, yeah.
Yeah, they're becoming investors, but you get to do a lot of the work, right? I mean, you go out and find the property, you go out and get the renter in there, you collect the rent, you deal with all of the headaches that normally are associated with owning real estate. So if you think about this in the context of time, when I got involved in real estate, I did it for one distinct purpose. I wanted my time back, right? And in the beginning, I tried to do everything that you do myself, and I realized I am no good at what you do. I can't manage properties. I honestly can't fix a toilet to save my life, even though I've tried. And I need someone like you to help manage my properties so I can have my time back. And if I can hire you to do the majority of the work for me, and I can sit back and collect cash flow, am I not buying my time back at that point?
You're definitely getting your time back. I'm not sure if you're buying it back. You're just trading. You're trading, a turnkey buyer, if they're trading their ability to leverage a bank loan and their down payment for my time and my system.
You got it, right? You got it. And here's how we put it all together. So let's say you did what everyone else does out there, right? Most people in traditional investing, they put their money in the markets. Right? Whether it's through a 401k or a mutual fund that they manage or a brokerage account or whatever it might be, they put their money into the stock markets. What we teach people to do is to put your money in one of the most powerful assets, which is real estate. Now, here's why this happens, right? In real estate, let's just do a side-by-side comparison. If you put your money in the stock market, how do we potentially make money?
Appreciation, that's it.
That's it, right? We buy a stock at one price or a mutual fund at one price, and we hope that at some future point, we're able to sell that same stock or mutual fund at a higher price.
And right below stock, right? Speculating.
Okay.
Because people are not, people don't buy off price to dividend ratio anymore. They they're sucking themselves into one play, and that's to make money if the stock appreciates.
You got it. Now, here's the scary thing, right? That's right there. We don't control that. And you kind of hit the idea with speculation. And when people start talking about their retirement plan, and this is where I deal with people so much, is they get really nervous and scared in their 50s because they realize all of their wealth and all of their future hopes and dreams, i.e. retirement, are tied to an investing strategy that they don't control. And people are scared to death. They're biting their fingernails, scared to death that 2008 is going to happen again, and that everything that they've hoped for and worked for and saved for will disappear right before their eyes. Now, here's the interesting thing about real estate. In real estate, we can also make money through appreciation.
Hey, Ryan, make 2 more columns with 2008 on each side too, since we're talking about it.
Okay, 2008. So right here, 2008, just put it right over here.
Now, divide the stock into 2008 and non-2008. We'll talk about what happens to all 4 of these in a crash too.
Okay. Yep, that's a good idea. I like that. So we'll put 08 right there. So here's the thing, and you kind of hit the nail on the head. In real estate, pre-2008, people thought that real estate only went up in value. And people who got into the real estate market, they brought the same mindset that they used in the stock market into the real estate market, thinking that they could buy a house at one price and sell it 6 months down the road or a year down the road for a higher price, right?
Yeah, which on the face of it, it's horrible. Real estate's an illiquid asset, and the reason stocks can appreciate so highly is because they are very liquid.
You got it. Now, here's the crazy part, and this is where we're going to talk about collapsing time. If this is the only way that we're making money, you have to be in the game for 30 years minimum to maybe make it work out. The numbers just don't work in your favor. You don't control it. The most you're going to make is 3 to maybe 6%. And you don't control that.
If you're betting on the market goes up 8% every year,
yeah, you're screwed, right?
Well, it's definitely going to take 30 years, right?
Oh, totally, 100%. I mean, and the sad reality of it is, and we won't go into that in this webinar, those people who have bet on speculation, bet on the stock market, bet on appreciation, they're all realizing the fact right now, all these baby boomers getting ready to retire, they don't have what they thought they would. They don't have what they need. And now it's almost too late for most people to fix it, right? So here is the art and the science of collapsing time, right? Just like in this wormhole, all we had to do was bend the rules. In real estate investing, we're not bending the rules. We're just playing by a different set of rules. In the previous webinar, I introduced the fact that business owners and investors play by different rules, and they actually pay less in taxes, which is one of those rules. So let's go back down here to the 4 pillars. When we buy real estate, and we buy it the way that you do out in St. Louis, Jimmy.
Sorry.
That was probably an investor calling right now to bend the rules of time.
Right.
All right. So when we buy real estate out in St. Louis, your real estate, does it cash flow and appreciate at the same time?
I know it cash flows. I don't really care if it appreciates.
Okay. Now here's the benefit, right? Cash flow, when we buy it for cash flow gives us sustaining power. If the market dips, if the value of real estate goes down, which again, we don't control, the way we can ride it out is if we have a property that is consistently cash flowing, right? All those people who got crushed in 2008, they bought real estate that wasn't cash flowing. And when the market took a dip, they had no way to ride it out, right?
Yeah,
so
a lot of people say real estate's like a bad haircut. As long as you just hang on to it long enough, it'll eventually grow out and look fine.
You got it. Time fixes all problems in real estate. I've heard that.
You, me, and Brad both bought properties in 06, 07, but we bought them as rentals, as a cash flow, and we couldn't quit our job based off those properties, but they all cash flowed, and they're all doing fine now.
Yeah, we wrote it out, right? I mean, we were able to ride it out. So when we're in real estate, we get money through appreciation, we get money through cash flow, and we can get both at the same time. Now, we also get tax deductions. So, Jimmy, why don't you tell us a little bit about how some of the deductions in real estate work?
If you buy cash flowing rental real estate, it's more than likely you'll pay 0 tax on that income.
Bingo. And this is exactly what Tom Wheelwright said when he talked to us, is that investors pay 0 in tax. And all they're doing is they're using the tax code to their favor.
I mean, that hour-long conversation I had with that guy was mind-bending to me. You're talking about bending time. Like in an hour, he told me how I could make my business more efficient.
Yeah. And it's amazing. I mean, the tax code is really written. I mean, I don't know how many pages are in there, but Tom Wheelwright said something like 1,000 pages plus written in the tax code, but only 5% of that tax code is written for employees. The rest is written to tell business owners and investors how to keep more of their money, right? The IRS, they use the tax code like a way to incentivize behavior. They want you and I to do certain things, and if we do them, they let us keep more of our money. So we're making money through appreciation, through cash flow, through tax deductions, but the most powerful tool in all finance is leverage. Jimmy, how do your investors use leverage when they're buying real estate?
All they have to do is put down 20%, and the rest is bank money.
Yeah.
And we did a previous video with Brad that just shows how you get to depreciate everything you borrow.
Absolutely.
What we're connecting turnkey buyers with is 30-year fixed finance, 30-year fixed interest rate loans. Like, it's essentially a middle-class welfare payment.
I love that. That's exactly what it is. I mean, if you can take bank money at 5%, but go out and buy real estate that will make you 10, 15, 20, 25%, and we're actually going to show the numbers on the next one.
And we'll talk about '08 real quick. Another way people got hammered in real estate is they bought illiquid assets with short-term financing.
Yes.
And so when the banks called in the loans, they couldn't do anything. So I sleep well at night when a turnkey buyer isn't buying my properties with interest-only loans or with even balloons. Like, they're getting 30-year fixed financing because they have a W-2.
And that's the cool part. Your biggest expense in real estate is fixed. And if we think about this from inflation, right, the cost of that mortgage goes down every single year because the purchasing power of your dollar goes up, but your cost stays fixed. You get to raise the rents, but you only pay the same fixed amount in mortgage every single year. So we're going to go through the numbers on this, but the bottom line is the way you bend time in your financial plan is you earn money in more ways than one, right? Now, this is a real estate webinar. We've also talked about the and asset, where you could actually take your money and put it into a life insurance policy.
This is a financial freedom webinar.
Yeah. You got it. So that's really what this is all about. What are we at on time, Jimmy? Where are we at on that?
We're at 8 minutes.
Oh, all right. We still got a little bit of time to go off on this then. All right. So the and asset, this is probably my favorite part of this whole strategy, right? You get to take your money and put it into a properly designed life insurance policy and take the exact same money and put it into real estate. And so that's how we bend time even further, is if you can have your money growing, compounding, and working in life insurance and growing and compounding and working in real estate all at the same time, we just take this once bent time and we bend it even further.
Yeah, and just to rip through the 4 pillars real quick, life insurance and real estate is the only assets you get appreciation, cash flow, tax deductions, and leverage.
Boom.
A stock, even though it's popular and everybody thinks it's sexy, your only play is appreciation. There's no cash flow. You get taxed at capital gains rates. If it's in a qualified plan, you get taxed at ordinary income rates. Only a sucker will take all the risk and get taxed at ordinary income rates.
Yeah.
And you can't leverage.
You got it.
Like, I pass on a lot of deals, like syndications and just lending to other people, because I have to use my money and I give up my ability to use leverage.
100%. So what we're going to do on the next one, guys, join us on the next video, because we're actually going to put numbers. So this was great in theory, right? We're talking about bending time. We're going to actually prove this out with math, with numbers, to show you how these 4 pillars work and how you can literally collapse time in your financial plan by using them.
Give them the call to action.
All right. So here's what you do. Call to action. Text cash flow to 797979, cash flow 797979. Or here's one other thing I forgot to tell you on the last one. Let's open this up. You can go to our website, cashflowtactics.com. And on our website, we've actually given you the ability to download your own roadmap right here, 0% retirement. It's a blueprint. It's an ebook that you can download that will tell you step by step why not to defer your taxes and how to use the IRS code to your favor. So join us on the next webinar, yeah?
All right, see you guys.